welcome to Cramer's Corner with this second edition of Technical Weekly Update. My name is Cramer Larsson. I'm a technical analyst, and I'm going to guide you through some of the interesting movements we have seen in the market over the past week, and also this morning after a lot of talks about tariffs in US. We're going to talk about Apple, very interesting one. This is a stock a week. From now on, we will have one stock a week where there's some interesting technical development. I'm going to talk about Nasdaq 100 index and euro dollar. US 10-year treasury yields, which is one of the most benchmark yields out there, determined by the market and not by the Federal Reserve. And finally, we're going to talk about gold. But before we start talking about that, we'll have a talk about what this is. This is a video for educational purposes only. There's no advice. There's no recommendation whatsoever in it. This is me to show you how I use my technical analysis, how you can apply it to a chart if you're also trading or investing. And this is all there is to. No investment advice whatsoever. All right, let's move on to the first chart, which is Apple. And as we can see here, we'll start on the weekly chart. Here we have a weekly chart, and if you're one of the new viewers I have, well, this is a candlestick chart, as we call it. Each candle here is 1 week because this is the weekly chart. Green ones, they're positive, market open lower, closed higher, and here negative one or bearish one, open higher, closed lower. Here we have what we call a doji evening pattern. This is a top and reversal indicator, very strong one indeed, and it has so far for now. So a strong bullish move up, indecisive week, and negative the following, and that is indication of lower levels. We had a good day, a good week last week until we got to Friday, and Friday was quite interesting after earnings. Market opened at the highest price during the entire session Friday. That was also both the open and the highest price were the same, exactly the same. And sellers took control straight from the beginning. Someone tried to lift it, but sellers just took control throughout the session and closed significantly lower on the day Friday. That is a very bearish signal. I will just remove this cloud here because that's a little bit longer discussion what's actually going on there. But this is a very bearish candle. And what it also did was that RSI, Relative Strength Index, it's a strength indicator that is showing the strength of a move. And I will get into more details about that. But what it is, as long as we are above 60 threshold and not breaking below 40, we are in a positive sentiment. Over here, we actually broke below 60. That was not a problem. Positive sentiment. Here, we broke below 40. So now we are in a bearish sentiment or negative sentiment. And that is an indication of the trend that we could be in, and also confirms a bullish or bearish trend or a sideways trend. So we were in negative sentiment, trying to get back above 60 threshold. I can tell you at the open Friday, it actually did test or maybe even spiked above the 60 threshold, but it closed well below and could move lower in the coming weeks with the market also. For Apple to establish a bullish trend, it must close above the peak Friday at 247.19, so 247.20. I always had a little bit to that. So that, if it closes above that, well, then it has resumed to a bullish trend. But now the bearish trend is still very much in play. Moving on to Nasdaq index, and let's just have a look at the weekly chart once again. Here we can see, and let's just blow it up so we can actually see what's going on. So we have been in a fairly bullish trend for at least the past 2 years or so. It's stalling a little bit, and here another thing comes into play. We have something called RSI divergence. RSI divergence is when the RSI, the strength indicator, is recording lower values, lower peak values. Here you can see they're declining, but market actually moved higher. However, we had a bearish engulfing up here. It's not the most perfect one because the previous candle wasn't that big, but nevertheless, market opened higher and closed lower, engulfing the entire candle also including the shadows or the wicks, but that's not that important. It is the body that is important. So actually indicating a top reversal. It's not confirmed just yet, but it's indicating that. But we have a declining strength indicator, so that could be a bit of a pickle there for the index. And here we have the Nasdaq 100 index as it closed last week. It tried to close this gap up here to 21,738, and that is key to close that. It didn't do it. It spiked above, but it has to close above. If it doesn't close above, well, then it's just an attempt, and it also sold out throughout the session. So that is a key to watch out for. It was at least Friday, but then something happened over the weekend here, and now I'm showing you the what we call the US NAS 100, the CFD that is calculated mostly on the future, so it's following the future quite a bit when the market is not open, and the US market is not just open. We can see here what happened today. We actually opened quite a lot lower, about 2% lower, around 21,000, dipping a little bit below the falling trend line here. So that will be key here the next couple of days. Can it actually close that gap up there, or will it follow through? If it does close below 21,300 on the future, that will be a negative signal. First, I will look out for what will happen today. Here we are back to the cash index, the Nasdaq 100 cash index, 20,974. First support. If it takes out that, then we have the key support level at 20,538. If it does close below that, well, then we are in a bearish trend, and we could drop much lower towards 19,500 and lower. But let's see about that. Moving on to euro dollar, that also, of course, also a lot of movement this morning. There's been a lot of movement in the forex market this morning, no question about it. Euro dollar, sterling dollar, euro sterling, Aussie dollar, and dollar Swiss, and the Swiss market in general also really a lot of movements going on there. So, but euro dollar opened lower here this morning and sold out throughout and spiked below the previous peak down, or trough here at 101.77. We are in a bearish trend. We always that. If you're following me on my YouTube channel, Cramer's Corner, TA, then you will have heard about this a little bit earlier. We talked about it already last week, but pushing lower here. And if we are looking at the weekly chart, that is quite interesting. You see where we are. We have been in a bearish trend for quite some time since these peaks here in Q3 last year, testing this support area here just around 102 area. But I think we will see euro dollar dropping to around par, possibly lower here sometime later this year, maybe in a few weeks, maybe in a few months. It's really hard to say the speed or the rate or when, the timing of it. But at least for euro dollar to turn around, it needs to take out the peak there at 105.35. Otherwise, we are still in a bearish trend, negative sentiment on the RSI supporting that view. On the US Treasury yield, is something that everyone should look out for, have an eye on if you are investing and trading. It is of course, the Fed is the Federal Reserve US. They decide the leading indicator interest rate, but this is what the market decides. This is the Treasury yields, 10-year yields or interest rate. So it is in a bullish trend, and we can see here after a massive correction here over the past year. So then it started bouncing back, building a new uptrend, positive sentiment on the weekly RSI, indicating we could push higher in the coming weeks and months. There's no divergence. So there is an indication of that. It's not a given, because what is actually unfolding at the moment here on the daily chart is quite key. We have what we call a shoulder pattern. That is at least what it appears to be. You see like a person's head and shoulder. Then we have the neckline. It's rare that it's flat, but it is flat in this case here, or almost horizontal. It has been testing a couple of times this morning and also last week. If it does close below that, then we can estimate or guesstimate how far will it actually drop. As a rule of thumb, it will drop all the same distance from the top of the head to the neckline. That is around 419, 200% of this move here. But there will be some support here at the 61.8 retracement of this is the uptrend here, and 138 projection just around 438. However, we often see it move down to the 786 and the 200 moving average and 100 moving average coming up, giving some support. It could do that, but I think we will stop around the 438 if it does close below. However, if it does move back and closes above 467, meaning above the right shoulder, then this entire top and reversal pattern has been demolished and we are resuming uptrend. So let's see what's going on here. Can it close below or not? 55 will also give a little bit of support. What is also key is that RSI is still in a positive sentiment, hasn't closed below 40. And if it starts crawling back above 60, then we are back in bullish trend. Finally, let's have a look at goals. And I know there are a lot of lines and everything on this chart, but just stay with me. It will be okay. So what we talked about it last week, actually. We had this triangle-like pattern here that it broke out of. Rising channel gave potential to 2,814.15, and I also mentioned 2,835. We could see that. We still see that. We are still in a bullish trend, but maybe stalling a little bit. We have a little bit of divergence. We see this peak value here is a little bit lower than this when the market move higher. But let's see. If it takes out the 2,817, I would say it's 18, well, then we are looking at 28.35, maybe even higher. However, if it starts breaking below this rising trend line here, then key support around 2,730, 2,725, some strong support there. If we're taking out that, well, then we're looking at levels below 2,700. And if we're looking at the weekly chart, and since this is a weekly occurrences, well, then we're still in a bullish trend. There's a little bit divergence. Values here are lower over here. Market move higher, but you should always trust the trend until we have a top and reversal pattern in place. All right. That is all for this week. That was the second edition of this weekly technical update. You can follow me daily on YouTube, my YouTube channel, Cramer's Corner TA. Thank you very much.